Hi there, and welcome to today's webinar where we are taking a look at the current state of play with SMSF investment strategies. So my name is Dunn, CEO and co-founder of Smarter SMSF, and these webinars are designed to really help bridge the gap between how we know the law applies, in this instance in respect to SIS Regulation 4.09 around what is required around investment strategies, and then how you can actually implement that within your practice and your SMSF clients through the documents that we have available on the Smarter SMSF platform. So today we will be going through both slides and then on the platform to, I guess, bridge that gap between those two processes and why this, in the past few years, has been a really important area that we've seen compliance ramp up with, and then what we need to be focusing on as we move forward, because we have gone through a period potentially and most likely with your practice where we've probably fixed up a lot of gaps around the investment strategy requirements, auditors, ATO expectation around this topic. And then we have to think about moving forward what that concept of regular review looks like. And again, we'll explore that both in the context of the Commissioner's views around the regulatory framework in SIS Reg 409, and then how that can translate from a document point of view as well. So if you do have any questions today, feel free. You can ask those to us in the chat or the Q&A. I'm more than happy to come back and answer those as we work through today's session. So let's get stuck into what we're going to cover today. So again, we'll take a snapshot of where this all started from the context of this focus on investment strategies and really what it means around the operation of our SIS Regulation 4.09. We'll also jump into a little bit further around not only the development of that investment strategy initially for the fund and what those elements are, but then drill down onto the review requirement, because in a lot of instances, we are needing to continue to satisfy the auditor that there has been a process of regular review. And as we know, the gatekeeper to the ATO as regulator of the SMSF is, of course, that independent audit process. We'll look at what the auditor is requiring, and we've seen that ramp up in expectations and why that is absolutely crucial to the auditors in managing their own risks, not only the risks around the clients. We'll then go through and I guess talk about some key lessons and so forth. And then we'll jump into the Smarter SMSF platform, and I'm going to show you our SMSF investment strategy documents. I'm actually going to give you a bit of an insight into our new document platform. At the same time, we have a number of our members working through that in a closed beta environment, and then finish off in terms of helping you to prepare and update and review those strategies as well. So where did all this ultimately start? Well, this is ongoing in essence, because we did see the Council of Financial Regulators conduct reviews off the back of the previous Murray inquiry into the financial systems. This back in 2013, and the issues around the LRBA use within SMSF was certainly flagged. Now, we've seen no legislative change around the use and operation of LRBAs, even though that was a recommendation to prohibit that function. A decade later, we're still seeing LRBAs in use. But as you will have seen over the past probably 5 or 6 years, the approach to the use of LRBAs have changed quite substantially, not only in around advice and the action that ASIC is targeting around those sort of things. We've seen changes to the product providers in this marketplace. And the other item was, of course, the ATO writing to a select number of trustees to actually really challenge them on the investment strategy standards. And in those operating standards, of course, it talks about the importance of diversification and asking them why or how have they documented that the lack of diversification is appropriate in their particular circumstances. So it was never the ATO's intention, and never is the ATO's intention, to tell trustees and members how they can invest within a self-managed super fund. But we do have very clear and distinct requirements as to how a fund will comply with the operating standard that sits within SIS Regulation 4.09. Now, ultimately, what's happened beyond that period of time is that then the ATO has issued more detailed guidance around what their expectations are, both in terms of behaviour of the trustee for investment strategies, but then also in respect to what auditors need to be looking at and be satisfied in their own role as well. And that guidance, you can see there, we've got QC 23320. So that's the reference if you want to go and find it on the ATO's website. And it focuses on not only those elements of SIS Reg 409, but really things like the importance of giving effect to a fund's investment strategy to help the members ensure that they're meeting their retirement objectives. And as you can see on the right-hand side here, the reason why this, I guess, has become more and more central to the way in which the ATO looks at the compliance aspects of this is because we do have a fairly high level of asset concentration that sits within self-managed super funds. And statistically, in the 1920 year, what you can see there is we still have north of 40% of funds that have single asset exposure or single asset class exposure in excess of 80% or more. Okay, so therefore, how are trustees demonstrating that this is the right way to help fund their retirement rather than having a more diversified basket of assets to support their needs? Now, I know from a financial planning context, many of you that may be advisors and are watching this would quite openly say, well, it may be we need to look more broadly at the individual's overall circumstances, what they hold inside super, outside super. That's all absolutely relevant to this conversation. But naturally, what the SIS laws are looking at and are specifically looking at is the asset mix inside the fund. And therefore, we need to ensure that we're documenting what those decisions ultimately look like for the benefit of the members. So we then look at beyond that, and we have our requirement that we must at least undertake an annual review, or the fund is required to regularly review the fund's investment strategy. So that second part that I said there ultimately means that at least once a year, we must be undertaking some sort of review and making sure that we have documented that either there are changes that are required or we are satisfied with it, and in essence, the trustees will move on. What is very clear is that the ATO's expectation is that once you do an investment strategy document, it is simply not set and forget. Okay, so there is a very distinct requirement to have the concept of regularly reviewed in the regulation to ensure that the trustees are continuing to assess and make changes where necessary around the current and future needs of the fund's members, giving consideration to their own personal circumstances. So when we look at what instances we might need to regularly review the fund's investment strategy above and beyond what would be the annual compliance function. So as you can see in the bottom left-hand side there, the investment strategy would be at least reviewed annually, and there would be documentation to support that. So ordinarily you go, we complete the fund's compliance requirements, tick that box, prepare some documentation to support that, and we move on. But there are significant other events that might occur during the year, and this is where the ATO's expectation is we'll have the trustees, as a result of these events that have occurred, have they gone back and actually reviewed the investment strategy in that circumstance? So that may be around market corrections. So obviously, we saw changes over the past few years through the COVID pandemic period. It may not have just been share prices. It could have been in respect to property. It may have been around rent relief and those sort of things that is significantly changing the dynamic of the way in which the funds have invested and therefore the returns that they're getting. Equally, where we are looking to add new members into the fund or we're seeing members depart funds, these are all going to, again, need to have a review and assessment of the fund's investment strategy because of inflows and outflows that are going to be happening in the fund. And finally, the other one that the ATO puts a lot of emphasis on is the fact that we see a change in the life cycle, so a stage of the life cycle that is happening in the fund. And in this instance, it's where the member, I should say, commences an income stream. So from that point of view, we're starting to look at liquidity and cash flow to be able to ensure that we can meet those pension obligations or other benefit payments as and when they fall due. So there's a quick question here we've got from Liz. So shouldn't government policy changes around investment and tax be considered a significant event prompting a review? So that is a very valid point. So it's not something that the ATO has necessarily listed there, but in that instance, I think that would be absolutely a position that the fund would need to contemplate as a result of legislative change. So if we think about the new Division 296 tax, where we've got thresholds above $3 million, well, quite clearly, in my view, we're going to need to see the fund think about how it's going to be investing moving forward. Not because a member might be leaving the fund, but we may be seeing adjustments being made to balances of those members because there may be monies being moved around or out of the fund. So I think that's a really pertinent point here that probably goes beyond the scope of what the regulator has really put here, because where we do see material changes, and that is important, material changes around policy and tax, and Division 296 is a really good case there. I again think that would warrant the trustees to look at this. And I guess what I find also interesting in this context of investment strategies is the very different and polarizing views that people have on investment strategies. And a lot of that is dictated ultimately by the type of behavior that the trustee fits or the members fit. And what I mean by that behavior is are they really a controller behavior trustee? So they're the ones that do it all, okay? So, and in many instances, they will say, I know how I'm investing. Don't tell me how to invest. I know everything that I'm doing. And therefore, I'm happy to kind of move on. And I'm only doing this document in theory because it's a compliance requirement for me to have to do so, right? And at the other end of the spectrum, we've got our what we call our outsourcer behavior. They rely upon advisors to do a lot of the work, professional advisors, both in the context of the compliance work, but also in the investment strategy and the makeup of that, probably both inside and outside of super. And in that instance, the investment strategy takes on a very different context. Not only do we have to meet the compliance requirements of the investment strategy, but we are very deliberately targeting different rates of return based upon asset allocation, risk tolerance, all those things to try and achieve an amount that would suit the retirement outcome needs in terms of income for that individual through to a particular age. So the investment strategy document, yes, it has an element of compliance attached to it, but it's then trying to connect the statement of advice and the recommendations to the trustee, and then we overlay that into our investment strategy document. And in the middle, we have, in essence, what we call our coach seeker, and in essence, they're probably going to be somewhere in between those two fairly broad spectrums. So it's very interesting when you hear the importance of investment strategies from different parts of the industry, you're going to get very different outcomes and views in respect to this, because auditors will tell you what they need to focus on for audit. Investment advisors are going to be focusing on what they believe is appropriate to help meet the retirement needs of clients. Accountants in the middle, again, they would probably have a much greater focus on compliance because of the limited scope of the advice that they can naturally provide around these. So yeah, it is, in my view, quite fascinating to see the difference. My personal view is that I think these should be much more than a compliance document, because ultimately, as advisors are trying to do, they're trying to actually set objectives in which the fund trustees can assess investment decisions on the basis that they're trying to meet particular needs. And there are, things that could occur in there that don't need to be licensed, that even accountants that are not licensed could actually provide assistance with to help trustees work out whether they are on track to meet their retirement goals or not. Probably a conversation for another day, but just I flagged those things with you. So when we go back and we take a look at this context of the auditor and their role in the investment strategy, there are some key requirements that ultimately need to be met. So one is that the fund has met the investment strategy requirements on the basis that they have an investment strategy document in place for that year, and it factors in all of those relevant requirements within SIS Reg 409. We have seen in the Smarter SMSF space in our platform over the past few years, many of the auditors saying the documentation that you're spitting out of your SMSF software is insufficient for the purposes of our investment strategy requirements. It does not adequately consider how the trustees have contemplated each of those particular elements, and which is why our document is something that we're really proud of in terms of making sure we've got the right balance between the trustees knowing what they need to complete themselves, unless they're getting advice otherwise, versus what an accountant, for example, can or can't do in the provision of that. So yes, it might be a little bit lengthy, but it goes through a process of simplifying that decision-making, helping the trustee understand what they're needing to answer, but they've made decisions and considerations around completing that particular document. Now, there is no mandated obligation under SIS Reg 409 to have that investment strategy in writing, right? Auditors will say, well, how do I audit the head of an individual? And that is rightly the correct question, and therefore, which is why we see many of these investment strategies ultimately being in writing. So what the ATO do say, though, is if there is no formal investment strategy, the auditor must obtain some form of written confirmation from the trustees on which they base their opinion of the trustee's compliance requirement with the regulation. So ultimately, we have to come back to some form of written documentation. Okay, to what length that is ultimately going to be up to the trustee and would need to satisfy the auditor. Does it need to be quite prescriptive? Can it be a bit more broad? In theory, it can be any or, as long as each of those elements within SIS Regulation 409 have been considered. Okay, so that is most important. We then need to ensure that as part of that process, that the fund is operating in accordance with that strategy. So not out of ranges. If we've got percentages in there or dollar amounts, which is why there may be circumstances whereby we might then list assets rather than showing those percentages. They are all part of the framework that would still satisfy the requirements of SIS Reg 409. And again, finally, there that the strategy has been reviewed at some stage during the year. Okay, and it may be in some instances multiple times during the year because of the amendments that we might see throughout pensions, new members, and so forth. And again, I come back to it's not set and forget. So what else are we observing? Over the past few years, what we have seen is this real uptick in the documentation that is required. Okay, so the initial strategy can't be found, which is not uncommon. There were deficiencies around that document. It may not have considered insurance, and that was obviously something that was introduced at a latter point in time. There is a much greater level of asset concentration in the fund, so the trustees need to demonstrate how the diversification requirement is satisfied where we have that asset concentration. So we've created minutes that deal with that stuff that go alongside the investment strategy itself. Why has this become important? It's become important because auditors are all about managing their own risk. So we're seeing these things needing to get raised in management letters. They are also looking at this because auditors need to manage the ATO risk through their audit the auditor program. Are their files sufficient in respect to these issues? And also trustee recovery risk. Now, we have seen in the past, both the Camembert-McGoldrick case and also the Baumgartner case. We do currently, as it stands right now, have a class action on Melissa Caddick, and we have a situation where there are around 5 auditors that are we're seeing trustees go and seek action against the trustees for not having done their job properly to have identified based upon particular investments, and ultimately that money was lost. So this is why these areas are becoming more and more important, and you're seeing more questions being asked by trustees in respect to the investments generally, but also in respect to the investment strategy requirement and the consistency that's required between both. So what we've been doing at Smarter SMSF is identifying that there is a real lack of tools and quality tools to be able to demonstrate these things, both in the context of the investment strategy itself, asset concentration, absolutely, and then what we might want to look at from a review process too. So then it is, well, what happens if the strategy actually isn't compliant? Okay, so if we get to a situation, and this is a fairly common outcome that we see with orders on the Smarter SMSF platform, that we can fix it. Ultimately, what we need to do is we need to go on and get an addendum document. So in essence, create an investment strategy document that will then satisfy the auditor in respect to all of those elements of SIS Reg 409. Okay, there may be a trustee minute if it needs to be approved or something else that adequately addresses those requirements. And ultimately, once they are prepared, we hand that stuff over to the auditor so that the auditor can then finalize that situation. So if the fund fails to act in accordance with that strategy, well, then naturally we go to the next step around, do we have contraventions, and at what point in time do we go beyond a management letter and we actually move into an auditor contravention that the auditor will be reporting to the ATO? And the criteria here would be, there'd have to be some serious problem for this to get to an ACR. Because as I've just said, the auditor can say, well, look, I'm not satisfied that we have an investment strategy. Please get it fixed, move on. Now, if that isn't provided and we ultimately get the same breach from the previous year in the current year, and it remains unrectified at the time of the audit, well, that's when we get to this situation of an ACR being reported. So I would find it highly unlikely that we would see many circumstances where there would be a breach of 409, because there is an opportunity to try and get that fixed and allow for the fund to obviously move forward and work through that compliance issue. Okay, now there are some exceptions to that. So you can see at the bottom there, the criteria may also be met if the fund is less than 15 months old and the value of any single breach exceeds $2,000. So there are some additional things there that also need to be contemplated. So in terms of not only what the regs say and so forth, when we look at our Smarter SMSF investment strategy document, where else did we point to be able to produce this template that can be used for our Smarter SMSF members and those that wish to buy it on a pay-as-you-go basis? Well, ultimately, like all things, we have to start with the deed. So our deed talks about the requirements that we must do to ensure that we meet all the elements of SIS Reg 409, okay? We then have, naturally, what we see around the ATO's guidance and the auditor's expectations around those things. And a lot of that has ultimately fed from APRA's guidance when it comes to investment strategies, and investment governance is probably more the right word that we see here, because we have one regulation that governs superannuation law. So that is around investment strategies. So there is a framework, a superannuation prudential guidance document, SP 530, that talks about the expectation by APRA on RSE trustees in respect to a whole range of issues. And what we've done is ultimately look at that document and transpose ultimately how those expectations would sit within a self-managed super fund environment. And that is what the ATO has ultimately done as well. And why do I know that? Because I was involved in the discussions with the ATO initially through the letter that was sent out as part of that Council Financial Regulator discussion, and then also in the development of the content that sits on the ATO website today. And the final one, from an advisor point of view, is really to go back and look at our report 575. And this was research that was done some time ago around improving the quality of advice and member experiences for SMSFs. And again, it talks about many of these elements and sort of putting all these things together for your clients. So that really helps us to frame up where we're at. Okay, so where we are from an investment strategy point of view generally, but then what we need to think about after we go through that initial process and then into review. So let's jump into our Smarter SMSF platform and just show you a little bit around the Smarter SMSF site and how to be able to order some of those documents. So I'm just going to jump onto the screen here. And what you can see here on our Smarter SMSF platform, we have the ability to create new documents. And what I'm going to do is just go over to our create new. So what we've got is our new document platform here. Like I said, we've got a number of people currently using this in closed beta as we work through these documents. And you can see in here, we have all of our integrations available, and then you can access things like our sample document. So I'll jump into the sample document shortly. But what we do as part of this process is allow you to ask questions like the phase in which this investment strategy is being created for. So is it for a new fund? Is it for an existing fund? I'm not going to spend time today showing you the integrations, but what you can see in here is at any point in time, you can connect your software if you use Class or Simple Fund 360 or Supermate. We are actually currently working on a CSV import as well. So if you're an advisor and you use Xplan or you use something else that you want to bring data in for, you will be able to do that as well and populate the form through that CSV function. So we get to things here like, is this for a new fund? Is this for an existing fund? If it's for an existing fund, are there things like the fact that we have single or heavy asset, single asset classes or heavy asset concentration within a class? And you can see in the form here, we have a number of tooltips that actually help to explain what we're asking and why we're asking in respect to this particular question. So in this instance, it might be yes, which asset class does this exist in? And then based upon the information that you include in here, we'll be referencing in the additional trustee minutes why the fund is investing in real estate, given the nature or the illiquid nature of those particular assets, why the trustees see this as a good investment. So we've standardized the number of paragraphs in respect to a number of these different asset classes, the most common ones that we see. And then again, it will allow you to generate some additional paperwork based upon the decision that is made there. Now, in addition, on the ATO's website, it does talk about the way in which you can provide for asset allocation. And that asset allocation, again, talks about percentages that could be relevant here, a dollar amount if you wanted to list ranges by dollar, or where you have listings of specific assets. So this is more common that you would see in respect to where single asset concentration or something might exist. So the reality is, in this instance, we may have property and pretty much cash in the fund. Well, there's no real reason why we need to go down the path of showing asset ranges. It may only put us at risk if we decide to make those changes. We go out of those ranges at any point in time. So in this instance, it may just be simpler to list the assets that the fund is going to acquire or has acquired and forms part of the investment strategy asset allocation area. Job is done. That does satisfy the ATO's requirements around Reg 409. Equally, if it's a new fund, again, you've got those sort of functions to be able to do and work through at that point in time as well. So again, you've got the choices that you can make in respect to those assets. So that's as simple as it gets around here. We, at this point in time, in particular with investment strategy reports, we are not allowing for currently the ability to put in specific options. And what I mean by that is if I go to the investment strategy template here, what you will see in here from the template is the fact that it enables you to work through that document with the client to work through that document based upon not only the education of why the investment strategy is needed, what the monitoring process looks like. So yes, we need to invest, but we need to then review. But then it allows us to capture information about that fund. And then we get into a situation where we're looking at each of the relevant requirements of Reg 409. So we talk about why this is needed, and then we provide the opportunity for the trustee to kind of choose their own adventure. So in that instance, they would tick a box that would be relevant to them, and then they would, in essence, move on. If that wasn't relevant to them, then what they would do is they would have the opportunity to write something in. Now, I go back to one of my very initial comments, and that was the type of professional that is ultimately looking at this in line with the trustee. And the fact that, when we look at the requirements around investment strategies and looking at objectives for the fund, it is all about starting to set some expectation around benchmarking performance to be able to meet the retirement needs of members. So what we do want to be able to see here is the ability to benchmark or measure what is going on in the fund, right? And therefore, if you are even an accountant, as an example, you should be able to provide advice, I use that word loosely, advice to the client as to whether they are on target based upon the objectives that have been set. It's really cash flowing an asset value to be able to support that. Because is the client simply going to remain in assets that are underperforming, or are they going to make changes? Because that is ultimately what the financial advisor is looking to do as part of the work that they are providing. So these are things that the trustee need to be looking at in their own mind, and therefore looking at objectives that are being set, in my view, are a really important requirement that need to be considered and then ultimately managed in the fund. You can then see things here around risk tolerance, and noting that different members may have different risk tolerances. You can then see the overall position and how they bear risk in the fund. You can see different ways in which they will look at diversification. So is it going to be broadly held? Is it going to be maybe predominantly in equities or fixed interest or in real property? Does the fund, utilize LRBAs and stuff we talk about shortly? You can see here, we not only include ranges from and to, but also a benchmark so that you can get that sort of reporting back in from your software as well when you look at comparatives. We also, if it's an initial strategy, we've got things like our single asset class and heavy asset concentration rather than the minute there that you get with reviews. Benefit payments, so we're looking at liquidity and so forth with pensions and the like, ability to discharge assets, insurance considerations, derivative risk, reserve management, really, which reserve management really doesn't have a place now with SMSF, but they're all still part of Reg 409. And then naturally what is happening from an implementation point of view. So that is our investment strategy template. It's fairly lengthy, but very quick and succinct in terms of being able to use it, because we try and make the client, i.e. the end user, our client is you, the accountant, the advisor, but the end user, give them the opportunity to better understand how they're going to answer the questions, because we're giving them the ability to look at choices and then apply them to their circumstances. And if they don't, then there's an opportunity to request something different in that regard. So, and that is equally the way. So if I just get out of there and we go back to our Smarter SMSF platform generally, we also have this in the context of an investment strategy review document. So what you can see here is we've got our asset concentration minutes. So you may have an investment strategy already, but what you want to do is you want to be able to produce an additional document that recognizes that the fund has heavy asset concentration or single asset risk inside one particular asset. So it talks to the fact that we have an investment strategy document. We've undertaken a review. what was the basis of that review. So in this instance, it might be the fact that we're doing it as part of the fund's annual compliance requirements. We have different assets in here that review might relate to. We did add into here things like cryptocurrency, which was one we kept getting a lot of requests on. And then again, you would go through and based upon the relevant answers here, we would produce text that would support ultimately that decision making. And if we go back up into here and we go asset concentration, you can see in here we've got a number of sample documents that reflect what this what these different templates will ultimately provide you. So we have a review in this instance of the investment strategy. We have property inside the fund, and then based upon a number of factors, ultimately it has been resolved that the investment strategy is right. And yes, whilst we don't have diversification, the trustees are satisfied that that lack of diversification still actually meets Reg 409 and then allows for them to move on, and that they will naturally continue to assess that as they move through the life cycle of that self-managed super fund. And then the last one here is, I might just close a couple of these, is around what we call our review statement. And the investment strategy review statement is, I guess, an abridged version of our investment strategy report. Because what this is doing is when we do have certain events, or it may just be as part of the annual compliance requirement, we're linking the review back to the investment strategy report itself. So we're documenting the fact that the fund has actually done something in respect to it for the year. So I'm just going to pick something in here. We've got our trustee, so we'll just call it Tesco. ACN, we'll just put one director in there. Gains a fund member. And then what, again, similar to our asset concentration minute that you saw there before, what we're then doing is we're grabbing some information that we know. So some of this can populate through the integration that you have, but we might be doing a review because we've completed the financial statements. We can populate some of this information if we knew what the balance was of the fund at that point in time. We've got one member. Is it a combination of accumulation pension or what is it? We're reviewing it based upon different scenarios that in here. So it might be the fact that they're commencing a pension. Are we looking at any changes around how we're producing that asset allocation document? Do we have that asset concentration risk? If it is, what is that relevant issue there? And again, you've got that similar process. And ultimately, what we're producing in this context is the investment strategy review statement. And the review statement, as you will see in here shortly, allows us to link back to our original document. So you'll see in here that the investment strategy was prepared at that point in time. We're focusing here on the monitoring and regular review, and you'll be able to see here that the basis for this document is linked to an event that is occurring inside this fund. So yes, it was maybe as part of the annual compliance, but it may also have been the fact that we're reviewing it because we've added a new member, started a pension, as I said before. Okay, and that we're giving effect to the investment strategy that we've previously done in respect to this fund based upon its whole circumstances. And again, you can see some of that population in here. And in many instances, all we're doing is if there are changes to some elements, we will change it. Otherwise, we are recognizing that the trustee is satisfied with the current procedure, the fact that we might not have any further change from the diversification in the original report. If there is, then we'll make those changes. We're satisfied that there may or may not be anticipated benefit payments. So therefore, we can put in those minimum amounts if we need to, or contributions. There's no change in respect to the insurance, or there is, and what are those changes? And then what we're doing from a monitoring point of view, and ultimately that gets signed off. Okay, so still make sure that as part of the review, we have considered all of the elements in respect to the compliance with regulation 4.09. So it's not simply good enough to say I have a trustee minute that says, yes, as part of the annual compliance, the trustee is satisfied that they have regularly reviewed the fund, right? Because how have you demonstrated that each of those requirements under SIS Reg 409 have been considered as part of that regular review? So what we've tried to do here is highlight what each of those elements are under Reg 409, ensure that in many instances we might be simply satisfied that there is no change, but we have considered that as part of this document, but we link it back to our primary investment strategy report that may have been established when the fund started, or may have simply been updated as part of this process in the last few years as well. So they're the suite that we have in respect to the different investment strategy documents. So I might just sort of flick us back over to our slides here. I've gone too far here. So then it ultimately comes back to trying to say, well, yeah, that's great. I can see the different steps that would be required here within our organization to be able to support that. One of the next and most crucial areas is then saying, well, what can we and what can't we do based upon our licensing position? Okay, and one of the very important reasons why we ultimately landed where we did with, in essence, our template is because the lion's share of the clients that we were dealing with fell into this unlicensed space. And ultimately, what the current framework says is that we must deal in facts. Okay, we can advise clients on the compliance elements to have an investment strategy. We can document that strategy where we have been instructed to do so, and that might come through the client themselves. It might come through the client and an advisor. There may be, and I guess it's fairly grey in the application of Reg 7.1.33a, when we think of the diversification issues around investment strategy. But ultimately, what I would say here is if you stick to facts, facts will be your friend, okay? That is clearly very different when it comes to being licensed, because you're not only looking at the documentation itself and the detailed preparation of that, you are factoring in things like risk profile. You're looking at assets being held inside and outside of the fund, short-term, long-term income needs, and ultimately the preferences and so forth. So quite clearly, that is a significant opportunity for those in the licensed space. So in terms of our document suite, I've shown you today the templates that we do have available in this space, from the investment strategy report itself through to the review statement that can be done on an ongoing basis, and then through to our single asset or asset concentration minute that is available there. As I mentioned, we do have our integrations with both Simple Fund 360, Class, and Supermate. And we are also releasing and have available, about to make available to our beta clients, the CSV import file, because we do have a number of other requests from a software point of view, advisors that want to be able to push data down out of different software, Xplan, Midwinter, whatever it may be. So as we work through those different elements, or even Xero and XPM and so forth, we will give a functionality to be able to grab export data from one system and import it into here, and map all that out so that you'll have a standard template that you'll be able to sort of shoot through fairly quickly and on an ongoing basis, and then apply that to not only the investment strategy document, but to a number of documents and a number of funds. So if you end up wanting to do this on a multi-fund level, so you might want to be able to add in 10 clients that you might want to produce investment strategy documents for, that import file will actually allow you to do that. It'll put them all into saved orders, and then you'll be able to go through and effectively just work through that template, hit submit, and then you'll get those documents generated for you. In terms of how people use these documents, ultimately, what we have found over the past few years is there are two very clear pathways to ordering documents. And one is, and this has definitely been the case with investment strategies, is there's a specific need subscriber. And what that means is that someone recognizes within their firm that there is a gap in the quality of the investment strategy documents. Now, that equally applies with deed upgrades and a whole range of things, but for the purpose of this session, we're looking at investment strategies. So they can come in through the subscription and take advantage of the subscription price, which significantly reduces your average cost of the document. And you can work through that as a specific project to get all of the investment strategies up to date. The other way that we see is that people kind of dip their toe in the water and they work through documents and they might buy them as they go. And you'll get to a point where ultimately the economics of it will be that you then move from pay-as-you-go into a subscription. And like I said, these are real stories that we constantly see. And David Devine, our sales and development manager, has regular conversations with people on this very issue. So have a look. We've got this one we only did a few months ago on the benefits of a document subscription. It's on our YouTube channel. We have a number of videos on our YouTube channel, technical and these sorts of things that you can access. So if that is of interest, I would suggest having a look at that. But let me just explain to you by way of an example how the benefits of the subscription could actually work, in particular on this journey one. So we've got Jackie here wants to upgrade all of her clients' investment strategies via the platform. She's got 80 funds. If we looked at doing this on a pay-as-you-go basis, it's going to cost her around 12 grand. So 80 documents, $150 plus GST. But what we could look at doing is actually look at getting a Create 100 pack, right? So $500 a month or $5,000 per annum. The big thing is that it's going to halve her average cost per document. Okay, so even if she didn't use the 100 documents and only use the 80, that is still significantly ahead of the pay-as-you-go option. So it's not about whether I will use 100 documents or not. It's actually working out where your break even is and then determining what it looks like as average cost. Because in this instance, if she does use all of those, she'll still have 20 left, and she may then look to use them for other things, deed upgrades, new funds, LIBAs, companies, whatever it is. And that's the flexibility of having those document subscriptions. So when you compare that to ordering via subscription, the break even versus PAYG would be around 40 documents. So as I said, it was about half what we saw there. That would give Jackie double the subscription to look at it in the context of other documents, other strategies, other ideas that are occurring within the client base. And that's what we see regularly with different firms that recognize the importance of the documents, the quality of the documents, and then how they can go and effectively implement these sort of things within their client base and do it cost effectively, but also efficiently for them. Recognizing for you, it is all about time and it is all about money. So subscription help tick that box of money. The integrations and the technology we have actually help facilitate and save you the time. So we have here our different packages that are available. We have bundles, our Create 25, Create 50, Create 100, and Create 250. Both monthly and annual subscriptions. And then for those that need a more tailored solution, we have a Create Plus package that is fully flexible based upon the number of documents that you might need within your business and other customization as well. What we do have on right now, which is important to note, is we do have a Black Friday sale. So we do actually have, we only do it really once a year or so, but we have 30% off our document subscription. So the first year of the subscription, 30% off what you can see on the screen there. It is only available until Friday the 24th. So if it is of interest, you can get in contact with us. David's details are on the screen there. So some key takeaways for you from today's session. So written evidence is key in the decision-making for SMSFs to be able to meet the retirement needs of the members. So written evidence is getting that investment strategy documented. But when we're documenting it, it is more than just a standards paragraph or whatever you might think is sufficient coming out of your SMSF software. And that's the danger that can present when you're getting some of these documents from the SMSF software. Are they complying with the deed? Are they going to meet the expectations of our auditor? All of these things are things that need to be asked around the documentation that you are relying upon from the SMSF software, which is why in many instances, we've partnered with businesses like BGL where you can actually order documents, Smarter SMSF documents from buttons inside BGL, because they recognize the importance of the quality of documents. Yes, they have to provide some because of the demands of clients, but they have no responsibility of that, and none of them really link to the fund's governing rules. So some elements of these documents are absolutely crucial in getting right. So therefore, how you're managing risk for your clients and how you're managing risk for your practice is really important in that process. And the investment strategies have been one area where auditors have kicked back pretty hard. Demonstrate how the trustees have continued to consider each and every element of Reg 409, which is our operating standard. And it therefore places much greater onus on the trustee, and therefore you as their trusted advisor, to remain active in the assessment of the fund's performance that can be measured against what the objectives are that have been set. And our role is to support you. We have specialist knowledge entrenched in this industry. We are at the forefront of what we do each and every day in our industry. We get invited to obviously participate on things and make contributions towards it. So not only does our education enable us to share that with you, but the tools that we build help you to ensure that they are being implemented correctly and successfully and done in a timely fashion where the technology can be sort of tapped into to do things in the correct way as well. So if there are any other questions, feel free to ask those now. I'd be happy to take those on board. But thank you for joining me in today's session. Joining us, obviously, you are clearly smarter than the average out there. So I do really appreciate you being a part of today's session. We do have a couple of final events for the rest of the year. On the 6th of December, we have our Changing Face of SMSF, which is our quarterly technical and regulatory update. There's plenty to be covering in that, including breakdown of the new Division 296 rules around those that have balances above 3 million. And on the 7th of December, the last one for the year, we're going to be going through our course update. We are close to releasing our second online SMSF course in our what we call our Starter, Smarter, Smartest model. So if you think about our beginner, intermediate, and advanced, we will shortly be showing you the new outline of our beginners course, or basically starter course that covers those in 0 to 3 years. Our former foundations course, we've sort of bumped up into an essentials course, so we'll be going through and showing you that. And as we move into 24, we'll be talking to you about what is going to be included in our advanced course as well. And if you do want to find out about any of our events, you can go to smartersmsf.com/events. And this session, along with a lot of these sessions and a range of other content, is also available on our YouTube channel as well. So thank you for joining me today. Once again, it's been great. We will send to you after today's session a copy of the slides, so you can go away and have a look at some of that. And if you are interested having a look at those documents or wanting to find out more about ordering, whether it's on a pay-as-you-go basis or subscription, you can also get in contact with us. So thank you all. Have a great rest of the day, and bye for now.